What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals, where I give you the technicals in under 10 minutes. Let's face it, if you're looking at your charts and you don't know in a short period of time if you're bullish or bearish or really neutral on the market, then you've got way too much going on in your charts. Today, I'm going to focus on the E-mini NASDAQ, E-mini S&P, E-mini Russell, and the 10-year. All of those products are CME futures products, and you'll see all those symbols as we go through the charts here today in TradingView. Also want to mention, if you are new to futures or if you are an existing futures trader and you're interested in trading futures on TradingView, I use TradeStation. If you go to tradestation.com/Anthony, that's tradestation.com/Anthony, you can get 50% off your brokerage fees for the life of your account, and you can trade right here on TradingView, which is pretty cool because I do that quite often. I manage a lot of my positions through TradingView because I like to chart on TradingView. Now let's get into it. Let's take a look at the NASDAQ starting off there. All daily charts today, all beacon indicator, which is free on TradingView. You can go and download the indicator on my page. And then I'm also going to be using VWAPs, anchored VWAPs, that is. The orange one's going to be the auto-anchored VWAP to the beginning of the year. The green is going to be to the recent swing high, which is highs of the year in the NASDAQ. And then I also have a VWAP anchored to that gap low here in the NASDAQ, because that's important, something I want to watch closely. And then also Bollinger Bands, which is going to be 20-period, 3 standard deviation Bollinger Bands. So when we look at the NASDAQ here on the daily, this is where I start pretty much every week. I mean, I look at the weeklies as well, but really the daily chart is what's going to set the tone for me. And I've been talking a lot on social media how 17,680 in the NASDAQ is the key level to watch. Once we get a daily close, if we get a daily close below 17,680, or even intraday, if we get below that this week, I think that puts a lot of pressure on longs for us to push back down to that VWAP, that anchored VWAP for the year, which comes in at 17,338. And so that is really the key level in NASDAQ, 17,680. If it stays above that, you look at this recent swing low, like I talked about having an anchored VWAP there, which really kind of coincides with my 17,680 level. It comes in at 17,720. In the NASDAQ, 40 points, give or take, is not that big of a deal. Their market's also been holding that. And so the market's showing us right now on the NASDAQ that the bulls are still in control, even after that little bit of a slip up on Friday. You got to get below these levels for me to see any real selling come into the market. And to the upside, if we start to push back above that anchored VWAP to the high of the year, and also I should have mentioned I have a 5-day moving average, which comes in 17,836 to 17,846. If we push back above there, I think we're back to new highs, and we push back up potentially where I think big picture resistance is 18,454 in the NASDAQ. And so that's what I'm looking for here in the E-mini NASDAQ. One thing I want to note is that if you go back to the earlier in the year, right at the beginning of the year, end of December, right into January, I have these two areas boxed out on my beacon indicator. Once we got a daily close below that red level, which comes in at 17,680, which I just discussed back early in January, we had that pullback down to that yellow neutral area. And until we see that, and the reason why I have that boxed out from the beginning of the year is just a reminder that until we get that daily close, until we push down there and really stay down below 17,680, you got to just tip your head to the bulls and let them know that intraday and on a swing basis, you have to be bullish. I just don't see any other way around it. Let's move to the E-mini S&P. Chart looks very different on the E-mini S&P. What's different about it is that the E-mini S&P is above the swing high, which is a high of the year, the all-time high VWAP. It's holding really above the 5-day moving average. It's pretty much right on it. And you also have you had a close below my key level, which comes in at 49.95 for my beacon indicator, but it closed right back above it. So really the chart looks very different than NASDAQ. It looks more bullish. And I think that 51.52 to me in the S&P, it's that old Bollinger Band peak. I look at that as unfinished business. If we continue to stay above 50.15 to 49.95 this week in the E-mini S&P, man, I just think that the bulls just keep pushing higher and we just keep grinding up. Very similar to the NASDAQ at the beginning of the year. I don't have that same boxed out area, but until we got a close below my beacon level, which is the red level on my chart, 49.95, which is where it currently is, you don't see any real weakness come into the market. And if we did get that close below 49.95, I would be looking short. And I've been looking for a test of 48.91 to 48.86. That's really a tight range there. And I think that would be really significant support for the market. That's my neutral area on Beacon, and that's also the anchored VWAP to the beginning of the year. And I think if the market holds there, we start continuing to grind back up. But I think if we did get that daily close below 49.95, I think it could be a swift move down there and potentially a move right back up. I should say, in the bigger picture, I don't know that we'll see that this week if we did start to move lower, but a daily close below 48.86, 48.91 would bring in 47.86, and that would, I think, bring in significant selling pressure into the E-mini S&P. Like I said, if not, we keep grinding up. Next, let's take a look at the RTY. And this is where it gets really interesting for me because this market, I just think, is a total chop fest. I've been putting in my Discord. It's a big no trade for me right now. Look at this. We're in that boxed out area that I've had on my chart since the beginning of the year. And you can see I have an arrow down and an arrow up. It's just a two-way tape. When you look at the recent high anchor to VWAP, comes really right at my level, I think, of significance of 2050 in the Russell. If it stays below there with daily closes, I just think we're going back down to 1944. And I think it's just a two-way tape. I think anything can happen in here. I don't like it. It's not a clear look of direction. I know some people like to really tell you that they have an idea of where the market's going. I'm going to be honest with you. I have no idea where this Russell is going right now. It's getting pushed and pulled by interest rates, which we'll get to the 10-year next. And for me, as long as it stays below 2050, I think there's some selling pressure on it. And it can come back all the way to 1944, which it continues to hold. It's a two-way tape. I think intraday, if you're a two-way tape trader, short term, I think you could trade either side. The other levels I talked about in NASDAQ and S&P, we'll watch those, as significant swing areas and intraday bias. But for Russell right now, it's just a two-way tape. If it starts to push above 2050, and we see more than one daily close above it, because it really can't get more than one daily close above it in a row, then maybe we start to push higher. I think 2210 is not impossible for Russell if they really start getting this party started. But for the most part, you're going to you have to really be patient. It's not a just jump in long and be bullish Russell. If you get a one day close above 2050, I want to see multiple day closes above it. If not, I think it's just going to keep getting pulled back in. It's like that movie, that scene from The Godfather where they goes, I try to get away from them, but they keep pulling me back in. That's the Russell. It's just a two-way tape, and I don't see it changing for now, unless we get a daily close above 2050. Next, we're going to go to the 10-year micros. Now, this is a product I actually recently did a live trading show on this. The 10-year micros is actually a futures product that trades the rate. The 10-year rate right now is 4.31. And I think this is really the market to watch this week. This is a CME product that's $1 per tick. So every time that the market moves one tick, it's $1. So I know some of you might be used to ZN. That's the 10-year futures. Well, this is the 10-year micro yields, and it actually trades the yield, which I think is an important market to watch. And if you want to trade it, you could trade it as well. Above 4.34, if we get above there, I think rates could spike up to 4.7. Now, I'm not a huge advocate for doing technical analysis on the rate percentages. But in this case, because it's a futures market, it actually has volume, and it's actually a market that's traded versus just trading a 10-year rate that's not being traded. I like to use my VWAP tools, my moving averages and stuff like that. So 4.34 is significant. If it pushes above there, one, I think that could push the Russell lower. I also think that it could push the S&P, maybe even NASDAQ as well. So watch this as the key level this week in 10-year interest rates, 4.34. If we push above there, that's huge. I think that puts pressure on the entire market. If not, we could push back down. 4.1 to 4.34 has been that range. If that's the range we stay in 10-year yields this week, then I think it has really no impact on prices in the futures market. Specifically, we'll watch the Russells, because I think the Russell, as I mentioned, is the one that's most closely tied to what's going to happen in interest rates. That does it for this week's 10-minute technicals. If you enjoyed the show, please share it on social media. Don't forget to hit that thumbs up if you watch this on YouTube. Have a great week, everybody.